I wanted to know, do you support Governor Brainard's vision for the Community Reinvestment Act reform? And is this something that we could see the Fed formally propose at some point?
So let me say that I think this is a good time to update CRA really in a way that is a win-win, both for the intended beneficiaries, low and moderate income communities, and also for banks that would like to have more certainty about what does and doesn't qualify and that sort of thing. The law can both be more effective and more efficient, as it comes down to. And we think this is a good way. It's also just a good time to take on board the way the delivery of banking services has changed through technology and demographic change as well. We worked very hard to try to get on the same page with the other two agencies. We think that an interagency final rule together would be the best outcome. We're sorry we haven't been able to get there, and we still hold out some hope that we will be able to. We've spent a lot of time on research and analysis and looking at meaningful reform. You saw Governor Brainard's recent speech presenting some of the thinking and the analysis, and we haven't made any decisions about what we're going to do, about whether we'll propose. I mean, our focus has been entirely on trying to get to agreement with the OCC, really. So haven't made any decisions about what we're going to do going forward. In terms of, Governor Brainard led our oversight committee over these activities for many years, and I asked her to take the lead on CRA modernization, which is a high priority for us. I was comfortable with her speech, and I'm comfortable with the work we've done and with the Fed's position on this. As I said, we haven't chosen to bring a proposal forward. We haven't decided what to do going forward. And we're not going to comment on the other proposal. It's just not appropriate to do. It's not about us. It's not about our views. It's about the views of the interested parties.
Hannah Lang with American Banker. Thank you for being here today. I wanted to ask about Vice Chair Quarles' recent speech on bank supervision, in which he laid out some suggestions for making changes to the supervisory regime. I wanted to ask, do you agree with his approach, and are there any plans to codify some of these suggestions later in the year?
So I do agree that the principles that he articulated of firm and fair supervision and effective transparency in communications. I also think it's a good thing that we would have brighter lines to define our LISIC supervisory portfolio, which we haven't really had to date. Remember that when a firm moves from one portfolio to another, that doesn't mean that its level of scrutiny or supervision will change. So, and I also thought that, he's raising some very interesting questions about, in the first part of the speech, where he's talking about regulation and supervision, and how to balance the desire for transparency and due process in everything the government does with the needs of confidential supervision. It's a very challenging question. It's one that could use further thought. And as far as the specific, proposals, they're interesting, and need further development, and we'll need lots of comment and that sort of thing.
Okay, the last question, Mark.
Thank you. There we go. Sorry, I had it upside down. That's not too good. Mr. Chairman, Mark Hamrick with Bankrate. Thank you. I wanted to ask you a question about one of the unintended consequences of the years-long low interest rate environment, and that is that savers haven't gotten as much return as would have otherwise been the case. What would you say to those individuals who've seen the Fed again cutting rates, eroding their ability to get a higher return on their savings, and how much would you take their plight into consideration? How much can you sympathize with them? Thank you.
Sure. So we are assigned a job by Congress, and that is to use our tools to pursue maximum employment and stable prices, and that's our focus. Now, monetary policy is a blunt instrument, but it's a powerful one. So I think if you look at the time since the financial crisis, that was in the week of fairly modest growth. It was a powerful recovery in the labor market, and part of that just is the effect of lower interest rates. So many people benefit from low interest rates. In fact, you don't hear, when you talk to low and moderate income communities, one thing you don't hear is you ought to raise rates. That's not what you hear. You hear quite the opposite, which is, please do whatever you can to keep this expansion going. I absolutely sympathize with people. If you're living on just the interest in a bank or on fixed income generally, then that's a challenging thing. On the other hand, if you own a home values, the housing market has recovered, other financial assets have recovered. So, but yes, for some people who are limited to those sources plus whatever other help they get, it can be challenging. I mean, we have to do what's best for the overall society and the economy. Those are our orders from Congress.
Okay, thank you.
Thanks very much.